Mark, I'm curious as to your take on the value of gold as a hedge against inflation. As you mentioned, your margins are stronger, and cost inflation for you has peaked. Really, I think for consumers as well, and yet gold continues, in terms of price, its march ever higher, not really on the back of a weakening dollar either. What's driving this rally, if not inflation or weakness in the greenback?
You know, Matt, I've spoken to you about this before. The risk of a hard landing is still real. And we saw that little anxiety come through the markets a week ago. And the dollar is weaker relative to the gold price. That's the ultimate measure because the dollar is the strongest of all the paper currencies. But what it's showing is that, and the developed economies are all having to deal with very large amounts of debt relative to their GDP. So the global economy is not in good shape. China is not where it was just a few years ago, and neither are any of the developed Western world economies. So, and the gold price is telling you that. So, and what's interesting just recently is that we saw a big focus on buying physical gold, which drove the gold price up, to the 2,200 and above. But now we're seeing a move back into the ETFs, and it's nice to see the reaction in the equities. And this is the what we invest in Barrick, is we invest in high quality assets, and ultimately the market recognizes that, and you'll get the lift up in the equities. And at the same time, our returns to our shareholders through dividends, capital returns, etc., has been on a level with our peer group. We've got embedded value in our business, and we don't have to go and do M&A, although we never give up on M&A, but we don't have to go and do it at a level where it's not easy to see value creation.
Mark, I'm equally interested here to talk about copper. If you think that a risk of a hard landing is still real, and copper had slumped 19% from its May peak, you do see a rebound now, but do you think that there's a bigger floor of copper prices that you have to be aware of here?
Yes, Sonali, absolutely. I mean, we've all talked about a very volatile next 2 years in copper. Copper really gets driven by many factors. One of them is the global economy, the perception of economic health in the world today. At the same time, we saw a sudden tightening on the supply side early in the year, last year as well, with the Panama situation. But we haven't seen the pull on the buy side yet. But ultimately that'll come because the copper industry is ex-growth. It will come. I've always said, our expansion in Barrick into the copper business comes in 2028. It's a great time to bring new copper production into the world. And so we're very comfortable with our investments. We do believe ultimately copper is in short supply, and it's going to get shorter and shorter. And so that's good for the copper price. But in the next 18 months to 24 months, it's going to be very volatile.